All right, what's going on, guys? So we're going to be doing a quick little trade review here from basically the 21st all the way throughout the 23rd. Basically, what I did here was originally started my longs on this retest right here at 524. It rallied up into 531. So I did end up catching a decent move on when I started the longs, but I wanted to play with the bigger picture here, which is the daily chart. I've been dealing with higher time frame reads and more of a daily chart analysis just because we have a ton of volatility day by day. So whenever you're catching the multi-day continuation for a 2-3 day period, it's going to be naturally a better risk to reward than catching like an intraday quick little scalp or whatnot, just because we have a lot of volatility, right? We have a lot of price swings to the upside and we have a lot of price swings to the downside. And when you're looking at this daily chart, the reason why I've always been wanting to swing trade this general range is just because we have an absurd volume anomaly towards these lows, and we've been getting a lot of digestion that started April 10th, right? So we had a lot of digestion throughout April 10th. We still have the top of the squeeze candle still yet to be met. We still have this gap here from the second through the third, actually slightly tested, but not tested to any, sort of big notable test that's structural and healthy for the downside. It more or less just kind of stalled out into that retest and then gap down subsequently, and then we never got the continuation to the upside, right? So I started noticing that over here. I started looking at the volume throughout here and understanding that, okay, we have a ton of volume on this day, this squeeze candle of 241.87 million volume. So 242 million volume. And then afterwards, what we had was some pretty healthy, heavier volume days, and then the volume started to really dry up as we popped, couldn't quite get above the squeeze candle, and then we basically just kind of floated around this area. That's whenever I started pulling fibs and realizing, hey, we're holding this progression gap here that starts at this spot right here, 523.67. And the top of it's all the way up here, right? So whenever I started to notice that, I was like, oh my, okay, yeah, this is the progression gap that needs held. This is basically just all trying to hold swing low, swing high. I'm sorry, that would be the wrong fib pulled because this was a very, very large leg followed by a lower high. I'm just looking at the impulse. So basically this. If you guys go into the hourly, you'll see exactly what I mean here. Technically this right here. So yeah, this was all basically just holding around that equilibrium area. And this is also wrong because the daily chart's a little bit wrong. So it technically never did test into the gap. The daily chart's a little bit wrong, actually. The fibs should actually be pulled from there. If you guys go into the hourly, you'll see it a little bit better. And we got our equilibrium test right around here, right? So I was basically looking at this to be an hourly LPS, meaning our last point of support, the candle in the higher low that puts in a very, very clear set in stone higher low that will allow for the continuation higher to the upside. And that was the case for the time being, right? We just never got the continuation through the highs. And then we pulled back and we formulated two more inside bars that retested near equilibrium. And then that's whenever I was like, okay, yeah, I mean, this has got to be something that sees a continuation to the upside here soon. And as I was looking at this analysis and I was looking at how the continuation to the upside was making full on out sense, that's whenever I went over into here. I'm going to hide this real quick. That's whenever I went over into the higher time frames and I saw a phantom print sitting right here. So what a phantom print is, and when you start seeing these on the daily chart, you have to take note of them if they're tying in really nicely with the thesis you're already seeing kind of play out in terms of price action, telling you what's going on, as well as a phantom print potentially in your direction. I kept seeing sell orders updating on the ask that were They come up on the dark pool as, quote unquote bearish orders, but they're bearish above, right? So it's price facilitating to those orders. And I saw a phantom print here, meaning it's a wick where price action never actually traded to on the daily. Kind of like if you guys see how this April 16th wick, it extends into the gap fill all the way up here, right? But if you go into the 15 and you take a look at what actually happened on this day, that was never the case, right? And this is also a very heavily dark pool order that was like an ask that's placed up here as well. So that was a really nice confluence on understanding that this is a gap fill, a very heavy dark pool order, as well as a phantom print, all kind of aligning in that same 536.70 spot. And that's also the top of the progression gap, right? So the confluence around here was really nice. I mean, there wasn't really anything else that I could see happening other than this thing eventually catching a higher low on the daily chart, which I thought was going to be this candle, but that's why I said leave room. I left room, but I did not really think we were going to get a 2.38% pullback. I did not. I don't think many people did, to be honest. So you always want to understand what's going on whenever you're leaving room, and then whenever your thesis is for the short term or wherever your beginning ads are at, you always want to make sure that you can at least mitigate it in a way where price action doesn't look horrible, right? And a lot of people would look at a day like this here, April 21st, and they would say, "Oh, price action doesn't look good. This looks terrible." A lot of people were bearish down here after this day's close, and I didn't really understand why, because we're still trying to find that daily high or low. This is 1, 2, 3. Well, essentially, this is 1, 2, 3, 4, 5 days in a row of very nice proper digestion where the candles are very littler, much like a smaller spread on the candles, as well as this finally being able to pull back. Like I said, if you guys go into the hourly chart, it's now pulling into the golden pocket, right? So swing low, swing high of the range and the whole entire move. If you want to, you could take it from all the way at the bottom here. I like taking the impulse, so just the leg that, really displaces us through. But the bottom line is that we're off of like the golden pocket area, right? And another thing that I want to talk about here real quick is just the intraday price action that was going on here April 21st, right? We'll go take a look at April 21st. A few areas that I had in mind would have been the golden pocket, of course. If we go over to the QQQ, we could see it probably looks a little bit different over here. You could take swing low, swing high. It's right around there off the golden pocket. So that was basically all I really had in mind. And another thing I kind of had in mind was this thing pulling into the very bottom of the squeeze candle. If we go over to the S&P, kind of pulling towards the very bottom of where the squeeze candle started from. But the big thing that I really wanted to talk about, and the thing that I've been talking about for a very long time, was the August 5th low, higher low, right? So this is a very large level that's technically a breakdown, quote unquote, a breakdown level after this candle was confirmed here April 9th, right? So that is a failure to break and displace beneath such a very big notable support that probably a lot of people went long off as we started to retest back into, and they probably tried to long and chased along on April 7th. They were obviously liquidated through April 8th. That's why I said the gap rejection followed by the next following trading day would likely be a squeeze out. I don't know if you guys remember that on Twitter, but basically April 9th told us that that was a big huge breakdown failure that the whole entire world was watching, right? So whenever we're getting these diminishing spread daily candles and we're getting very low volume retracements back down and we're getting pushes into the golden pocket all within very low volume, and then you guys go take a look at the intraday action and you can say, okay, yeah, they're clearly bidding the market down here. Why? We'll go into the intraday action on the 15 and the 5-minute chart. We'll take a look at the 5 minute just because that's whenever I really like to look at like dissecting price action. So basically, we had a nasty little gap down. It wasn't anything that was like, I was up at 4 a.m. on this day. It wasn't anything that I was like, wow, 1% gap down. This sucks. I had June calls, guys, with room to add. It's not anything that bad. Like, some of my trades that I have high conviction with could potentially go into drawdown, right? I could be a little bit premature with some of my trades. Um, so we have this whole entire open and we have our volume profile down here. And as you guys know, like effort versus result have to typically match each other. So what that means is like whenever you're seeing minus 2.7% moves in the S&P, but you're seeing very low volume, no attempt anywhere within this price action of where buyers actually stepped in with size and just simply got absorbed and matched by a seller, what you more or less had was you had very low volume and you had no buyer attempts anywhere of any sort of size, right? So like whenever you're looking at the volume profile, let's just say on the 15 now, and you could kind of compare this to other days. This is very consistently lower volume. This is really dying out towards the lows, right? And then we start to get that big rip and that really nice wick and daily candle closure with a really nice strong move with a lot of volume behind it. I mean, this volume basically makes up for the previous 30 minutes before, and that was all buying as well. But you're looking at the profile beforehand, and there was no buyer attempts anywhere. If you guys go to the 5 minute, no buyer attempts anywhere, right? Whenever you're looking at something like this, right, and you see very heavy volume off the open, you see a very large wick, and then you see buyers try to fight back, and then it tries to put in higher lows, and then it stalls out towards the highs. That's buyer effort there, right? And then that's just sellers eventually overpowering them in this general range and things needing to pull back a little bit. You go over here, where's another example? I mean, this would be where, sellers came in and buyers kind of just overpowered them and covered the entirety of their move, and they closed the S&P back a little bit more on the stronger side from where a lot of fear was coming back in, probably on this leg lower, and then it rips to the upside, right? This is all kind of like absorption of sellers. We go over here, guys. There was no buyer attempt anywhere, right? Find me a point here in price other than maybe down here around noon, and that wasn't of any sort of big volume, right? From the low of that of around here, it was bottoming out on 47.52 thousand volume, right? And then it continuously grinded its way higher on like we'll go to the 15 and take a look, right? There's nothing there, right? Nothing. I mean, you're getting 278,000 volume here at 12:30 on the clock change. And you're pushing into these levels where you should be finding buyers. So I was super shocked down here. The most shocked moment that I had about this trade was whenever I was over here and I was buying and I bought this. So I bought like right here at 511.50. And then what happened was we kind of got a little bit of continuation into 513. And then whenever this came out and we broke the new lows and it was of volume, that's whenever I started to think I might be wrong here, right? Like I said, I left room to add, and I wanted to add into the lower ranges, right? Because we're going into the daily chart. We understand that things could definitely sell off just because they want to break this buyer floor, this daily support floor, collect more stops, collect more inventory beneath those support floors, and then obviously they have full collection of inventory to be able to send this thing to the upside with ease, right? And squeeze a lot of people out that are trying to short the hold down here. But all this really was it was like I said, just kind of bleeding its way down into the higher time frame golden pocket, as well as the on top of the August 5th low, which is a very, 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 very well-known support, a very well-known level. So whenever they're playing with it, and then you get a lot of people like kind of falling for they have FOMO up here, right? They're trying to time a higher low up here, and they have all of their size up here. They're full size for a swing trade. You got to think there's a lot of people that are probably trying to build out longs off of like this daily support. It's a very simple, easy way to look at things. And sometimes you have to understand, okay, I might go down a little bit and I might deal with a little bit of drawdown, but I understand that they could undercut this support floor to be able to collect more inventory and bid the market down. And that's exactly what they did. They bid the market down. So they were pulling bids, they were spoofing bids, they were pulling their bid orders all throughout this day. They were not filling any sort of big buyer in this area, right? It was all just buyers playing very passively until the close. And then whenever I knew the close happened, I knew we're gapping up, we're going to 540. We're going to meet that phantom print that we talked about, that we saw all the way back on Friday, that still needs to be met up here at 537.61, which is also that gap fill. I just knew that that was all going to happen, right? So that was a really nice opportunity there. So I closed out the last of my position today for like 160%. I should have held the whole entire thing all the way up there. It's not the biggest deal in the world, but basically what we were looking at, guys, is just the market being bid down, everyone getting faked out essentially throughout this leg lower, throughout this portion of price. They close it strong. They put in a really nice wick off of where the previous hourly LPS was at. Okay, so this is all just pushing technically into a demand zone. They reclaim the progression gap on the daily chart that we've been talking about within the NASDAQ and close it back above. They close the overnight gap right around here and they close it back above that as well. And then that's whenever we had the really nice strong squeeze through. If we go over into the NASDAQ, the levels are a little bit different, but they're also really, really clean. If you guys go to the S&P, however, it was a really, really nice looking move here off of 523.67. That's basically the higher time frame that I was looking at to be able to scale off of after a break in base. So I got to scale my position throughout up here before the headline actually, which is really nice as well because we were looking at like, okay, take your recent impulse high, recent impulse low, and start really trying to scale off of like equilibrium or just that general range. And it was actually, I was in the NASDAQ, so this is going to be a little bit different, but I was pulling from the high to the low of the leg down, and I was looking at equilibrium to be able to scale off of. And I was also holding some trailings on shorter expirations off of 444, right? Just to claim the end log, to hold that, to break a base and use that as a newly found support. And they undercut it. They put in a 5-minute head and shoulders on top of it, right? And then this is probably whenever a lot of retail got bearish again. And then they closed back up towards the right shoulder and they bounced it off the neckline of the 5-minute head and shoulders, right? And they closed it back above the progression gap in the end log that was closed here today off of 444, right? And we're closing now above the 438 progression gap here. We closed the end log here from Thursday into Monday, which is 444, and now we actually successfully closed the daily candle close over that, and we also closed over 523 on the S&P, right? So this was all really, really nice, and we still had to meet the phantom print. This was a really nice strong gap and go candle, and whenever you see a candle that looks like this, where you have a really bearish day, and then you gap up and you find the continuation and you find a strong close, there's a lot of people caught off sides on a candle like that, and that's whenever you get that fast pitch and you get that opportunity to be able to just, hit a nasty home run on a trade that you hold a lot of conviction in. I probably should have made, honestly, on this trade, with how trading has been lately and how you sometimes have these little cluster of like 3-day periods where like you have this super high conviction idea. I probably should have definitely cleared 150K probably on this. I mean, I don't even want to know the numbers on on what things are up here from 510 in terms of like a weekly contract. I was thinking about doing it, but I didn't want to be too irresponsible just because I was dealing with like I was down like I was down almost 10K on this at one point. So I definitely had a lot of conviction And this is one of my biggest size trades ever. Um, but the fact that 540 got met, the fact that we gapped up 2% in after hours of yesterday's after hours session, the fact that we sold off today, which I'm going to be talking about second to that, all just does not surprise me at all. It really does not surprise me. I think that this move was honestly one of my easier trades. And guys, all I'm doing is I'm looking at the volume coming off of the lows. That's all I'm doing right now. And then I'm looking at structure developing, because it's not strong internally to be able to push this lower beneath the external candle, which is this candle, the big one, the April 9th one, that has way more volume than any of this. This is why I kept saying the short side trade is bad, the short side trade is bad. And idiots will be like, oh, you don't know what you're doing because I posted the short side trade is terrible on the 17th and then we fell 2.5%. That's not the point here, guys. The point is that you should be looking in one direction because we have an edge in one direction. Like over here, there's no way that I could be able to tell, oh yeah, the market's gonna break down and they're gonna, collect all the stops beneath this buyer support. They're gonna pull it down into the April 5th low, and then they're gonna accumulate the last of what they need off of the golden pocket. Like, no, 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 no. We don't know that, right? You have to just be very patient and let the trade come to you. The trade that was coming to us was this, honestly, a gift from God on this gap down of, minus 2.38% because I probably wouldn't have made as much. I started to get really, really, really heavy throughout that day just because it was just a really nice opportunity. You don't oftentimes get these opportunities. So, especially with a phantom print to the upside, very low volume sell, super strong close, right off the golden pocket, really big volume coming off of the lows, really low volume digestion in between that. It's almost inevitable that it has to move to the upside. Do you guys understand the volume patterns behind everything, right? You guys understand how effort has to equal result, and then obviously the effort from one side that is shown that is very strong with very heavy intention is much more notable than digestion from the other side that is of lower intention. Intention meaning volume, the amount of money put behind a move, the amount of absorption occurred within a candle, the amount of fuel behind a candle. This has so much more fuel than all of these candles combined, right? And this is obviously a bullish candle, right? Same with the bottom end of this trend, right? This has the most volume technically down here on April 7th. That is a bullish candle. This is a gap rejection bar of lower volume that put a lot of the short side traders underwater, right? So whenever you're pulling back into this and it can't really push lower, and all it's really doing is pushing to the mid candle point of this day, and the volume is really, really, really dying out, they can't possibly push it lower. They don't have enough fuel to push it lower to outweigh the amount of volume shown off of the April 9th candle, right? It's impossible. It's not. It's not like it's impossible. Like it sounds crazy, but it's actually impossible. Unless there's a headline, unless there's something to push this thing a little, it can move a little bit lower. But people calling for new lows, like that guy that makes fun of me, or I don't even remember his name, but the guy that was like talking shit on me or whatever, like he was calling for like new lows, like this. Like that's not possible. You guys have to get that through your head that that is not possible. Um, it's almost like looking at this UTAD here and saying right after the UTAD and right after like all of these days of action, or right after, let's just say the August 5th candle with this amount of volume. It's like you trying to be the guy that's shorting this candle here for new lows. Like if don't say volume is your edge and be don't say volume is your edge. Don't even say you trade volume and you think new lows are coming beneath this low here on this day. because that makes no sense. That means you're not using volume. Does that make sense? I don't know if that makes sense or not, but like I literally know people that were calling for new lows that say they use volume. Like you either do not know how volume works, one, or you're completely disregarding all of the volume shown on the chart. And I'm not trying to be an asshole. I'm not trying to be cocky. I'm not trying to be, like, oh, well, I called this and I called that. Guys, this call was not hard. It was hard mentally on the trade, and it was hard on my mental capital to be able to hold through all of this. But actually, seeing how the outcome it went wasn't hard. It was not hard. We're going to go in the equity market now. We're going to talk a little bit about a lot of the mega caps, right? Because obviously these have similar looks over into the S&P. I also want to talk about SQQQ progression gap. So I was in this trade with a buddy of mine named Lucid Capital. Me and him together were probably down a combined 6 figures on that day that we fell like 2.5%. And we were just talking, we were just saying, and then I brought this chart to his mind here because I was trying to help him hold conviction here because he had more size than me in this trade, and yeah, it wasn't. It was getting a little bit ugly. I'm not gonna lie. SQQQ. Okay. So very very big progression gap here on SQQQ. Very, very, very notable from 42.53 at the very bottom of here, all the way up into 46.16 that they completely knifed this through on. Boys, this all looked like a lower high. I don't really know what else to say other than that this looked like a very disgusting looking lower high on the progression gap. Do you guys know how bear pegs work? Do you guys know how bull pegs work, or just very, very strong candles? I know there's some VPA traders in here that look at a very nasty looking candle and they go, oh, well, that's a bull setup. Go take a look at Tesla. Everyone was so scared to buy this S&P. Everyone was so bull on Tesla and not scared of this, but everyone was kind of scared of this over here. And it's kind of similar structure, right? When you're looking at the actual candle structure and the volume patterns behind it, it's kind of similar structure. You go over to Tesla, and it's a very, very, very similar structure, right? Right over here. Obviously, this is a much more notable gap up, and there's obviously a little bit more of a reliable risk level to play around here. But you're not getting this picture perfect type of setup here in this market like you see here on happening on Tesla. It's just not going to happen. So yeah, with that being said, I mean, everyone was so scared to buy this thing over here, but they weren't scared. You're not scared to like buy like a bull peg candle, or you're not scared to buy like something that shows off like a really really nice looking super bullish candle that's like very telling, right? That a lot of people disregard, right? It's not hard to have edge in the market because so many people disregard these things. No offense. Like I said, this is for educational purposes only. I'm not trying to be rude or anything, but people in here were disregarding this, right? And that's what gives you edge whenever other people disregard opportunities that are shown like this. And not too many people were bullish, guys. So if you aren't necessarily bullish down here and you were thinking like I'm crazy or I'm like out of my mind or I'm gonna blow up or whatever, I understand it. But like I've been in the game for a long time to the point where like I kind of just know what's going to happen off of this type of setup because I've seen it so many times with how sentiment was. We're not in the window of strength. We're not in the window of where Vanna Charm are in the market and they're making a very nice impact on price, and they're very supportive of, price moving to the upside, and, we're getting a really nice Vanna squeeze. We're not getting anything like that. I think my conviction was a little bit higher on April 8th and April 7th for the bottom, and for the long side trade to revert back to the mean throughout like these two breakaway gaps. But I will say, guys, this opportunity over here, it definitely had me a little bit comfortable when I saw that close. And then that's whenever I was starting to push the gas really heavily. I couldn't type things in the alert channel just because, meaning like for intraday trades, I caught an intraday trade on this as well. Both days actually. Caught an intraday trade to kind of be prepared for a mitigation or a slight loss on such a heavy trade. My swing trade closed minus 17% here, and then I did buy some shorter dated calls whenever I started to see like a buyer slowly creep into the market down here on this base. I think I took it on this break of structure retest. So it was basically these lower highs turning into higher lows, and then once I saw this candle here, I bought some calls after a little bit of momentum off of this one, and then I sold them off into the close, and then I believe no, I didn't swing any of those. And then the next following days, whenever I took the intraday trade. So this is whenever the trade management got very serious for me because we gapped up and I wasn't green. I wasn't green here, which I don't know how. It didn't really make sense because my like I don't know, it didn't make a lot of sense to me. It was a little bit weird. I was barely red. Barely red. I was like basically break even. But we go into the pre-market session and we take a look at this, and this is whenever sometimes trading gets very difficult because people will freak out over one red 5-minute candle. And I was allowing myself for a leeway to obviously look at like a pullback into the overnight gap if it immediately rejected 438, but I wanted to make sure the 438 rejection wasn't of anything strong, just because you always have to consider the other side in case you're wrong. You always have to understand your plan and your when you're going to bail out of a trade whenever you know you're wrong, right? That's a very important part of trading as well. So I knew I was going to be wrong if there was a nasty rejection off of 438. If we go over to the S&P, it would have been off of around this gap, right? So there was a little bit of room higher in divergence between the S&P and the NASDAQ off open. But also with the S&P, just the bigger, higher time frame progression gap. If you guys look at the smaller time frames, we had like support breakdowns on the overnight gap around here. You also had your yesterday open at 521.16, which is the bottom of the NWOG technically. And those all got claimed into the around the open, and then that's whenever I took the intraday trade on the S&P right around here at 521, risking the 520 psych, which is right around the opening print. And I couldn't even like function at the moment because I was like, actually my nerves were getting a little bit high. It's kind of hard not to get a little bit nervous when you have such a large trade that you came back on, and that you had really nice ads established on from the lower end, but you're still not quite green. So there is definitely some risk associated with the trade. And once I saw all of this folding out, and then I started to see this thing really catch a little bit of steam off of like, after we started to get momentum to the upside, that's whenever I was like, okay, this is definitely going to be a win, right? You technically could have taken just this high of day area as well, and that was the pullback off of the headline that got hit. So this was a really nice, easy swing to hold for June contracts. It was definitely on the shakier side of things for May, and that's why I sold off a decent portion of the Mays into the fill of the NWOG for like a 40% win. But the Junes were really nice management, and that's why it's always nice to have a little bit of a backup further dated whenever you're looking at the bigger perspective of like targets potentially being able to be met all the way up into 540 or 537, 538. Um, so this was just a really nice pullback to be able to add a little bit more off of. Um, I had to remain very calm, cool, collected. I didn't want to get too involved with like a 5 minute chart here. I have a June expiration and a May 16th expiration. There's no point in looking at this slight pullback that's not of any sort of crazy substantial volume and say, oh yeah, this is totally going to reverse. It can simply put in a higher low on the 15 or on the hourly. And you guys take a look at the hourly chart. And that's exactly what it was. It was a higher low off of the Monday high of day. And then we obviously got the squeeze through and the target being met. Now we have a path of least resistance basically being set up here off of the top of the squeeze candle. And we have like a 545 path of least resistance with gaps still to be met to the upside. I think by May 16th I think we can honestly see into the 550s and above for a gap sweep leading into the May 16th expiration where dealers are actually short put on. Um, but yeah, I mean, that was all the trade management really dealt with. There wasn't really anything else that I had to say other than, levels being reclaimed, really low volume. They bid the market down and they collected more stops on the Monday action, a bear NWOG, which price always typically facilitates back into when you have a bear NWOG and it's internally within a candle structure that's actually very bullish with a lot of the volume coming off the lows. It's a really nice opportunity to look for that to revert back to to close the new week opening gap. So essentially, like what price target number one would be right around here at 444 on the Nasdaq. On the S&P, it would have been 526-ish. And we closed the daily candles, like I said, both above that. Now we'll go take a look at some of the other areas of the equity market. NVIDIA, what it did was it filled a slight little gap down here. What it also did was, I think this one definitely undercut its fibs, but that doesn't matter because it's technically in discount. If you guys put on the extended hours, you could technically pull from the very bottom end. And then if you guys go to the daily chart, take a look, and it's kind of looking like a higher low candle from lows to highs there as well off the 618. All of the tech charts were in discount, right? Microsoft was basically what this was doing was it was pulling back into a level that needed to be held on the daily chart and pivot back above as well over here on this previous resistance, turning a support where we had a lot of the volume coming in. Like I said, very, very large level, and I'm just looking at a higher low from the April 7th lows. If we go take a look at something like Tesla, it's kind of just basing within a very large bull gap. If we take a look at Amazon, it's basically this is a weaker looking structure, but same general idea amongst most of these tech charts. Google was a super nice looking chart. It's just been trading like absolute junk lately, but this is a really nice bull gap fill, an undercut of this swing low here, and a higher low on top of that swing low. There was a lot of confluence in the overall Mag 7 market. To be able to say that, this is going to revert back to the upside. Banks, they had a really, really nice depiction of another higher low where this thing needed to possibly pull back into the bear gaps that are sitting above us. And then we go take a look at everything else like Apple, and it's kind of all just looking very similar to each and every single chart. I mean, Apple doesn't have a very clear looking chart by any means. But we're looking at like swing low, swing high, and this is just equilibrium here. It's a little bit less of a retracement, but it's still a discount with very, very, very big lack of seller progress. We go take a look at SQQQ, which is the bear leveraged ETF, I believe. Is that what that is? I don't know if it's leveraged, but yeah, it's leveraged, yeah. I don't know what I meant. I don't know what how leverage it. I don't know if it's like a 3x leverage or whatever. But what this was doing was it was a lower high off of a very, very notable bearish candle, right? And it was pulling into the progression gap. If you guys are EMA guys, they were a little bit noisy, I can't lie. Might have been like your 20-day, maybe like a 50-day, I don't know. But all it really boils down to, guys, is that there was a big signal off the lows, right? And there was no higher low being put in yet, and there was targets to the upside to be met. So now we'll go into the GLD. And what I could have done, and we'll reflect a little bit on this trade, what I could have did was I could have waited for very clear, this is an OPEX day here. So I didn't have to add on an OPEX day. I actually thought we would get the OPEX squeeze, and that's why I did. But at the end of the day, we didn't have to add. So, you know, that didn't have to be an add. I initially added on this low over here off the progression gap, which is 438 on the NASDAQ, and that's why I went up a little bit. And that's why I had a decent day on my account throughout April 16th into the 17th. But yeah, we kind of just had an inside bar that didn't really show anything just yet. So I could have waited for a little bit worse of a fill and a little bit more confirmation rather than front running it. And all of the confirmation was through the 21st after OPEX, which is a little bit weird. But the window of weakness after an OPEX, it doesn't mean that we're going to be weak. It just means we don't have the supportive flows to add to the support of price moving higher to the upside. It doesn't mean that we're going to sell off. Vanna Charm returning typically does mean we're going to move higher and that there's going to be an added extra support to the market. However, the window of weakness does not, it's not fully indicative of just a straight sell-off. It's not. So the trade definitely took a little bit of conviction. We'll go over into GLD now. So with this pop that I was looking for in tech, we wanted to see gold roll over. And why is because we had 1, 2, 3, 4, 5 breakaway gaps to the upside. This also, if you guys are taking a look at like upper trend line analysis, typically with the parabolic short, what you want to look for would be like an upper trend line overshoot. And this thing overshot its upper trend line so easily, right? This is where I was looking for previously with the extensions. This is where we previously shorted gold, was like the overshoot of this upper trend line. This is just a gauge to realize that things are getting a little bit more on the extended side. We had the overshoot and the extensions above with breakaway gaps into the end of the first quarter. And then the volume started to really ramp up at the top of this trend. And that was really nice for rollover here from like where the April 7th bottom kind of was we were looking for like the bottom in the market. But whenever this all happened, that's whenever the conviction got very, very, very heavy, and I was honestly just looking and waiting for the higher low to be put in place. And then whenever I saw all of that happening throughout like April 21st into the 22nd, 22nd is whenever the conviction got very heavy just because levels are being reclaimed and whatnot. We go over to GLD and we can see how the 22nd is whenever the signal was kind of given to us. This thing gapped up and then it sold off pretty hard throughout pre-market. And then if you guys go into the smaller time frames, it kind of just consolidated around here, defending that rejection candle that was pretty notable. I mean, this is a pretty red candle, and this is a pretty decent drawdown when you're looking at from the pre-market highs at where this actually gapped up from. Gold fell 2.5% into these levels, right? So then I was looking at the previous day high. You could also take a look at on the parabolic short. You could take a look at like VWAP. I know it sounds weird, but the undercut of VWAP followed by the retests and levels also kind of tying in with confluence to that, and levels being reclaimed within the NASDAQ, you can start to really conclude that gold is going to roll over. So I bought a short right off the open, and then I added lower highs beneath 316, 315, and then whenever we started to really get the pullback, I added a little bit more off of right around here. So right around the or below is whenever I was like, okay, this is a decent looking trade. I'm going to add a little bit more off of 314, and then I'm going to have my risk off of this candle all the way up here. So that's what I did. And then we had a really nice gap down and a follow through all the way down into this fresh bull gap that needed to get swept out, right? Which starts at 302.75 and then it extends all the way down into 297.78. So as long as we pulled into that, that was a decent take profit area, and we did. So that was a really, really nice opportunity over there. And now we'll go into the short that I took today. We'll take a look at the short I took today. What I was looking at was obviously two gaps to the upside, two decent extensions. Like, I mean, this is a kind of an extended move from lows all the way into highs. I mean, that's a, wait, is that right? Oh wow, we rallied 8% from Friday's lows or Monday's lows. So yeah, this was leading into Besant all the way up here. So we'll go into the 5. If you guys look at my Twitter, you'll see where I was saying this morning and in here in my channels that a seller stepped into the market. Very big volume off the open. I already knew the seller stepped in off of the up here. You could just tell. And there was no strong buyer that was holding the top of the phantom print and the top of the progression gap on QQQ, which is at 458. What this did on the S&P actually was it took out this high up here. So it took out that high day, swept into the resistance, and there was no strong buyer throughout that. The volume started to really die out. And then once the volume started to die out, Trump started talking, and we had like a little spike in volume, and there was no subsequent reaction to that. And then that's whenever I was like, okay, I'm adding short, and I'm risking basically 440, 430. If you guys go over to QQQ, is a little bit cleaner on Qs. What I did was I risked where this high started to fail all the way up here. And then like basically this resistance started to fail as a breakthrough and then a failure to base. So it was basically a trade that looked something like this. Short position, added around here, stop basically above high a day or above this level. So about a $2 stop with the reward all the way down into, I should say, somewhere within this area of the gap, of the bull gap. We'll go over to the S&P. Basically, a risk that looks like ads here, risk above that high, about a $2.50, $2.75 stop, and a pullback into the bull gap. We're looking at like a 3R trade, right? So opening print, it was lost, break and base beneath, and then we broke and we based beneath that for quite some time. But I started to understand that there wasn't even really a big seller throughout today's action. Nor was there a buyer, right? So that's not really adding to my bias into tomorrow. And if we go over into like SQQQ, we can see how that was in a support off of the open, right around here, It's also kind of like a really clean back test of where we broke out from. Really not much more to talk about here other than like this just being a simple support bounce. Two overnight gap ups back to back to back. It already met its phantom print. Sellers might try and close this thing back beneath that print. Obviously, from a higher, bigger time frame perspective, we have just a simple resistance up here. This is a slight bear gap that was left unfilled from that wick high all the way up into this close. Or no, I'm sorry, that's not a gap. Yeah, I mean, that was a very simple, easy trade over there as well. And then you could have re-rolled profits on the short side if you really wanted to, and take those overnight if you want to into off of 458 lower high, which is beneath the opening print here at 458 as well. It's also the progression gap being retested as a lower high. So yeah. So yeah, that was the review. My takeaways from that would just be sometimes you're going to be dealing with drawdown. Another takeaway that I would have about this would just be I did try to front run this a little bit too early, just one day too early, which sometimes will happen, and sometimes you have to look at that and you have to say, uh, yeah, you're not always going to be perfect. The GLD short, in my opinion, was the smoothest and the cleanest, and also today's short. Uh, but aside from that, guys, I mean, this has just been really clean trading, very patient trading. I haven't been putting on a lot of trades, and that will change. But we're at the end of April, past OPEX. We're leading into May. May's not historically a great month to trade. We're past the April OPEX. This is why I was so confident in the April 7th through the 17th window, and that's why it's very important to take away wins within windows where trading can be, and most certainly options trading could be a little bit more lucrative when it comes to these windows where volatility can be a little bit better. So yeah, just been sitting on the April 7th through the 17th Windows win. I kind of used that to be able to stomach a little bit of drawdown on this secondary opportunity that we had here. Yeah, I mean, that's all there really was to it. The only things that I've missed as of lately was the 3 lower low sell climax look on the Bitcoin that I tweeted about. Basically into the golden pocket, a pull from lows into the highs, into the golden pocket. One lower low, two lower low, three lower low, barely any separation beneath any of these previous lows, right? That's a 2.83% separation within a month of action. The one that initially started into the climactic low was only a 4.81% separation within 38 days of action, and this here was a 2% separation within 11 days of action. So this is all really, really, really nice analysis over here, and then we got really, really tight on this 8-day pattern here in the mid 80,000s. And this back test needed to happen into the distributions lower extremes of support that we previously had. So we'll see what goes on with Bitcoin now. Basically what we're doing is we're pushing into sell side discount. So you take lows, highs, and you are pushing close into that golden pocket. IBIT was a really, really nice chart that I missed as well. Really nice gap fill, swing low, swing high, discount base. Hardly any separation on these lows, which then filled the gap, took out the previous low, only a separation of 2.21%, followed by a lot of volume at the lows, right? A lot of volume down here. And then obviously the wedge pop, the EMA reclaim, which you kind of gauge as your risk for the continuation. Very, very, very big notable call flow that was coming in off of these days around here, which was a directional bet to target 54 into this week. So those guys are paid. But yeah, Bitcoin was kind of aligning with the thesis. We had the phantom print. We had all the volume off the lows. We had sellers continuously adding sell orders into the Phantom print right here at 537.61. We obviously had the Phantom print being met within NVIDIA. If you guys are taking a look at NVIDIA's Phantom print, this was never actual trading action happening into here at 99. We ever so slightly undercut that into a gap fill right here at 96.30. And then we bounced from there. This was where the Phantom print was at. If you guys take a look, no action actually traded down there. It only traded into 103. So that's $4 of downside that we were looking for to be met, leading into, you know, an area where the bounce can happen from. So yeah. If anyone has any questions about what I'm reviewing here today, feel free to ask. I try to break this down in more of a simplistic way. There is more that I could talk about, but I want to make sure you guys just understand the charts, because the charts were the main leading indication for me on this long side opportunity. So yeah, if you guys have any questions, feel free to ask. I'm gonna get going now and go eat dinner. And yeah, I don't know. I might be trading tomorrow. My week's kind of already done, considering I was able to meet target on the last of the trade today and scale out the gold for a win, and take the short today for a win as well. So yeah, I'll see you guys.